Hello everyone, I'm Shekhar from Momentum Lab, and today is 31st of July 2024. I'm going to do a monthly review, and in this monthly review, I'll discuss 4 points. First is I'll be reviewing my portfolio and be introspecting it, just like I would do with myself, but in public, so that other DIY investors who are investing, they might have a perspective of how to review their portfolios. And secondly, I'll be discussing about my strategy. So if someone who's new to the channel, they can understand how I construct my momentum portfolio strategy. And thirdly, I'll also be discussing the markets in general. How are the different markets performing? How are the sectors performing within the markets? We'll also take a look at the RRG plot and see which sectors are performing better. And lastly, I wanted to show you guys a small dashboard that I built, which will help anyone quickly understand what stocks are doing well, which sectors are doing well, and which market caps are doing well in one single snapshot. So this Google Sheet will help any discretionary traders to identify and pick some great trades for them to invest. So let us begin. I'll share my screen first. So let's see the portfolio review. So in this month, we have done around 2.33% profit compared to 4.36% of Nifty 200. We compare with Nifty 200 because that is where I pick all my stocks, and Nifty 200 is my universe. So we have lagged the Nifty 200 index. The reason being that we fell severely. Our maximum drawdown in this month was -9%, whereas it was only -1.5% with Nifty 200. So even though we fell by -9%, we were able to quickly recover and reach a respectable returns of 2.5% compared to 4.5% with Nifty 200. Nifty 200 stayed flat almost in terms of drawdowns, and that's the reason it could uh, do a good returns of 4.5%. If you compare the ROMAD ratio, which is nothing but the returns divided by the max drawdown, stands abysmally low at 25% compared to 307%. The risk to reward ratio is pretty good in Nifty 200 for this month. And for this month, our portfolio was performing better than the index for 41% of the days. It was initially in the first 10 days of this month where we were overperforming or doing better than the index. And after the budget session, our portfolio started to fall. And that was the reason for underperformance in general. And if you see the overall portfolio XIRR, it is at 43.64, pretty decent. But we have to wait and watch how this number pans out as we finish 1 year. Anything less than 1 year is not that a meaningful number. Now we have seen this portfolio review. Let's also compare quickly against the different months. So you've seen that this month we have underperformed. Our strategy data, let me zoom in a bit so that you can see these numbers. So this month we did around 2.3%, whereas the index did 4.54%, right? So let's compare from the start. In the month of April, our portfolio did 3.5%, whereas index did 1.8. And coming to May, we did 5.5%, whereas the index did 0.5%. In the month of June, we did -1.3%, whereas the index did 6.6%. Pretty good lead that it has got, and that can be seen in this performance. So by the end of June, both our strategy and Nifty 200 were neck because of the significant improvement that Nifty 200 had. And all our gains that we had so far in the month of April and May were evaporated, and we were almost same with Nifty 200. In the month of July, we started well initially, and we had a good lead with respect to Nifty 200, but everything fell apart during the budget session. Now, on budget session, we fell very hard. As you can see, the drawdown was close to 9.5%, meaning from the top of these levels, somewhere around 115, we went to 105 kind of levels. So this fall was around 9.5%. Whereas you see that red colored one, which is of Nifty 200, it had a very small fall of -1.25%. Now, this fall is something different from the previous election results fall. In the election results, both Nifty 200 as well as our strategy fell, and we were able to recover quickly. Both the Nifty 200 and strategy were able to recover quickly. This happened because we had equal share of winners and losers, and they contributed same in the recovery for both the index as well as in our portfolio. Now, in this fall, it seemed that we had more number of losers in our portfolio as compared to the winners. Thereby, we had a severe fall as compared to the Nifty 200. Now, this can happen only when there's a sectoral rotation that has happened. So some of the winners have moved from our portfolio, and now we are holding some duds or losers. That could explain the divergence between our performance versus the Nifty 200 performance. Though we had picked up of late and regained much of the distance between us and Nifty 200, but we still have to see. It is a long journey again till we are able to recover and perform better than the index. So these blue colored bars indicate the drawdowns that we had from the tops. So the biggest drawdown so far was during the election results, that is at minus 12.5, and the next biggest was during the budget session, minus 9.5%. So far, the most volatile sessions or volatile events have passed. One is the election results, second is the budget. I'm hoping that the volatile sessions volatility would reduce and we would be on a path for a smoother trend. Let's quickly take a review at the strategy also in terms of different metrics that we have. One is that the portfolio heat is really good, meaning we have now more room to take some more risk. As I mentioned, risk can be taken in two ways. One, we could top up our portfolio, so thereby again bringing the portfolio heat down, or we can relax some of the tight rules. By relaxing these tight rules in terms of the percentage drawdowns from the 52-week high, or maybe reducing the word tank held. These are some of the ways that we can do, thereby ensuring that we stay longer in the game. That's the whole essence of tracking this number, portfolio heat. So if you see the other thing that we right now have an alpha of minus 3.6, I just showed that we are trailing the index as of now. And it's been 121 days so far. And the overall profit as on today, after 121 days, is at 10.34%. Now that's about the portfolio. And in our portfolio, we have 50% of the stocks coming from Nifty Junior, and the remaining 43% of the stocks coming from Mid Cap 100. Only one stock is there from Nifty 50. We exited one stock because it breached the 20% rule from its 52-week high, that is BDL, and we are waiting to refill that stock whenever we do a next rebalance. Now, I've given you an overall idea about how I do my rebalance. Let's talk about the rebalance and the strategy ones. So far, if you have followed my strategy, it started with these rules. By taking Nifty 200 as the universe and having a couple of filters. By adding these filters, I come up with the stocks in uptrend. And again, from the stocks in uptrend, I do a momentum ranking based on last couple of months, 1, 3, 6 months, and then finally arrive at the top list. Now, once I get the top list, I pick the top 15 and wait for the rebalance. The rebalance usually happens every 2 weeks. And during these 2 weeks, I see if the stocks are still in top 30, not top 15, top 30, so that my worst rank held, if by any chance some of the stocks are slacking a bit or taking some pause, I'm okay with that. And I see that they're at least in the top 30. If they're not in the top 30, then I'm going to exit that stock. The reason for having such a tight kind of rules were so that we are not having severe drawdowns in the initial phases when I start my trading journey or my momentum investment journey. So these rules are ensured to protect me from the severe drawdowns the moment I enter. We always assume that we are entering at a very wrong time and our entry is not perfect and we have not timed it well. Now, if you plan for the worst case scenario and have very tight rules, then the possibility that your capital erosion will be severe will be minimized, and we will be in a position that we might come out in case some black swan event happens. We will come out with very less pain. So that was the whole intention of having very tight rules in the initial go. Now, as we have seen that the portfolio heat is now better, meaning that we have performed better in the overall portfolio and we have some leeway to take some more risk, then what we do, we have reduced the tight rules. One such rule that we have reduced was, instead of top 30, I've reduced my worst rank held to top 40 stocks. So if a stock is not even in the 30, I'm okay it to be in the at least top 40. If it is not even top 40, I exit that stock. That was the leeway that I had given to my portfolio. This happened 2 weeks back, I believe, 2 weeks back. And the other leeway that I took was to reduce or to remove the 200-day EMA filter. If stocks are above 100-day EMA, I'm fine. The 100-day EMA should need not be above the 200-day EMA. And the other relaxation that I had in my rules was the number of updates in the last 6 months. It need not be 50%, it can be 45%. So I've relaxed or removed some of the rules. Now, the objective is to have as many minimal number of rules as possible. Thereby, we are not overfitting the data, and we have a smooth momentum strategy. Now, after doing this 2 weeks, even after 2 weeks also, after severe drawdowns and corrections, we still are having comfortable portfolio heat, or we are in a position to take even more risks and thereby reduce the complexity of the strategy. So I'm going to relax a couple of more strict rules that I had. One is to have the worst rank held move from 40 to 45. So if any stock has a momentum rank in top 45, I'm okay with that to not exit it. If it crosses above 45, then I'm going to exit. This is not for a new stock that I'm going to pick. This is for the existing stocks that I already hold. And if I'm rebalancing it for the next time, and when I rebalance, that time these stocks should not be more than 45 rank. If I have to pick a new stock, obviously I'll pick those stocks which are in the top 15 only. That's the whole funda. The second main relaxation that I'm going to do is, instead of rebalancing it every 2 weeks, I'm now going to rebalance it every month. This is to ensure that I'm not churning out regularly, and I'm churning it at a much relaxed pace, because we are okay to keep some of the Dutch stocks for a longer period of time. Reason, as I mentioned again, the portfolio hit is sufficiently large enough. I mean, we're okay to lose whatever that amount that I have shown so far. That is a risk that I'm willing to take. With that risk, if I'm able to stay for a longer period of time, then nothing like it. So that's the whole essence that we're trying to rebalance, or we're trying to reduce the relaxations. As time goes by, I might relax a couple of more rules, maybe the 20% that I have as a checklist from the 52-week high, that might go even further down to 25%. So as you'll be seeing, that I might be ending up eventually with lesser and lesser number of rules, hardly maybe 4 to 5. That's the whole point of running this exercise. Now, with that being said, let's take a look at when do we want to rebalance. Now, usually the rebalance can happen at any date or any days, either 1st of every month or 31st of every month, maybe 10th, 11th, etc. For that rebalancing period, I've chosen mid of the month. That is 15th of every month, I'll be rebalancing and not rebalancing on the month end. So the next rebalance for me will be on 15th of August 2024. And the subsequent rebalance will be on 15th of September 2024 and going forward. So far, as I mentioned it, we have one stock which we have to fill, that we'll let it be empty till the next rebalance, that is 15th of August. Now, if someone who's interested to see what are the current list of stocks based on the momentum rank, I've already run that query or the Python code. I'll just quickly show that. So this is the list of top 45 stocks as of 31st July 2024. So this code has already been shared with you guys. You can use this code to, if let's say if you want to follow a similar kind of strategy, or maybe tweak rules a little bit, right? Then what you can do is, you have to change the DF summary sorted final rank head 45. Initially, it used to be 30, meaning we are picking the top 30 stocks. So head basically is a function which in Python, it picks up the top, whatever number that you give, those number of rows in the data frame and prints that in the table. So if you've given 30, now you can change it to 45 or 40, whatever number that you like, and get the results. Now in this top 15, we have let me see what all stocks that I have within this top 45 as of today. I have RVNL, Nasdaq, Oil. Then I have Trent, and then BEL, and then Dixon, Motherson, Sumi, and that's it. So there will be around 8 stocks, I believe, that I have. So if I were to rebalance today, then I would have picked up 7 new stocks from the top, like Suzlon, Torrent Power, Kalyan, Jewelers, ZS Life, ICICI Prudential, OFSS, Indus Tower. Now, since I'm not rebalancing today, I'll be rebalancing on August 15. We'll see what happens on that day. Now, you might have noticed that some of my stocks are not even in top 45. It doesn't matter. I'm only interested on the day of rebalance. If on the day of rebalance, if they again come back in top 45, I'll keep them. If they are not in top 45, I'm going to remove them. So that's the whole fund of rebalance. There's one more thing that I wanted to highlight. If you compare with my portfolio, is that You see the red colored line and the blue colored line. The blue colored line, which is my portfolio, goes way above the red colored line sometimes, and then also goes way below the red colored line, meaning it has a higher volatility with respect to the index. Now, volatility is good as well as bad. If you're trying to curtail the volatility by maybe taking Sharpe ratio or maybe taking by eliminating some of the high volatile stocks, then it cuts both ways. You might also be cutting the overperformance as well as the underperformance. Now, by having pure rate of change momentum ranking, then we are having that fat tail risk of some of the stocks might overperform, and that overperformance is what we need, and we want to hold on to those stocks so that the positive fat tail distribution might overpower the negative fat tail distribution, because anyhow we are eliminating the negative fat tail by having the 20% cutoff. If someone was feeling that I'm talking out of jargon, let me quickly help by showing you a diagram of what I mean. So whenever we construct any profile or portfolios, right, we expect that there will be some volatility. Now, if you see, uh, this is how the returns usually are distributed. Let's assume that is a normal distribution, and let's say this is the positive side and this is the negative side. Ideally, what we want a couple of stocks, not all, maybe a couple of stocks to have extraordinary positive returns, and we want to eliminate or risk or put a cap on the negative side. So this will ensure that we have some winners, which are massive winners, and we might have a lot of losers or a lot of small winners, which nullify each of them. And these some big winners might give a big returns. Now, if you are curtailing your portfolio by ensuring that you're only taking low volatile stocks, then what happens? It cuts both ways. If you're taking low volatile stocks, it might cut on the downside, but it can also cut on the positive side. So you might not have great winners. You might not have also have great losers. So that's the risk pure rate of change momentum would undertake. So that's the strategy that I'm following. There are ways, there are people who create Sharpe ratio. There's nothing wrong in that. That also works really well, but it has its own limitations, whereas rate of change also has its own limitations. So based on your personality, try to create a suitable momentum portfolio, whether you want to give more weightage to pure returns or whether you want to give equal weightage to returns as well as risk. Now let's look at the markets. Now before I take a look at the markets, I wanted to show you market snapshot dashboard that I created. Now this dashboard, I'll share it in the YouTube description. Please take a look at it. You can use it. You can use it every day. This data fetches real time, and you will be able to see the numbers change during the day. So what it has three level of detailing. The first level, we'll compare the multi assets. One is the Nasdaq, second is the Nifty, third is the gold, fourth is the liquid instruments, which are nothing but maybe you can term it as short-term debts or bonds. So you see the 1 year returns, the 6 month returns, and 1 month returns. So this way you're able to see where is the money flowing or where is the momentum. So you see that the momentum is in the Nifty 50. So if someone who's willing to construct a momentum portfolio on the Nifty or the Indian indices, then that's it. Now is a good time because the Indian indices are performing better than the other assets. Now we have this context. So someone who wants to trade also can look at these assets and take a call where they want to put their money on. Now we'll do a one level more detailing and see within the Indian market, what are the different market caps that are performing well. We have the Nifty 50, Next 50, and then we have the Nifty 200, and then we have Nifty 500. Within this universe, we see that the Nifty Junior 50 or Nifty Next 50 is performing really well on all the different time frames. Now we'll go one level even deeper and see what are the different sectors that are doing well. Now I've tried to list as many sectors as possible. There is a differentiation between sector and themes or thematic sectors. Sectors are from auto till PSC. These are based on industry classification. These are themes. Now, the thematic sectors can be an amalgamation or cross functions or cross sections of different sectors under one theme. Maybe let's say infra is a theme. It might have realty. It might have uh, construction. It might have a couple of others, maybe in metals, etc. And MNC might have from different sectors, maybe from pharma, like it might have Abbott, maybe it might have Siemens from manufacturing, electrical. So these are thematic stories from consumption to service sector. Now, this level of detailing will tell you where or which sectors are overperforming or doing well over different time periods. This again is a helpful way to visualize. For example, if you see that there are a couple of sectors which are doing really well on all time frames, meaning they're in complete uptrend, like as you might have noticed in the RRG charts, or if suppose some of the sectors might be there where the 1 year returns were not that great, but of late they've started to give a good returns in the recent 1 month or maybe 6 month. So these are some of the sectors to take a look at. Maybe there might be a turnaround story. So different kind of uh, uh, matrices will tell you a different story, and you can take a look at them and come up with your own hypothesis for trading. And the last level of detailing is at the stock level. So I've listed on all the Nifty 750 stocks, and you can see the 1 year, 6 month, and 1 month returns for all the Nifty 750 stocks. And these are color coded, so you can see which are the ones which are doing really well. And you can apply the same kind of principles, like if the stocks which are green across the time frames, or maybe they were earlier in a red color but now changing into green, or maybe they were in green earlier but now slowly turning into red. So you can pick up based on the top level uh, sectoral, and then market cap level. You can take a couple of calls and then see which sectors or which stocks within those sectors or market caps are doing well, and you can use them for your own trades. The only missing link here is, which I'll be filling over a period of time, is that with the stocks, we ideally need to have the market cap or the sector to be linked. So beside this stock name, if I add the sector and the market cap, then it will become easy for anyone to quickly do a double down and say, let's say, if we have, for example, the Nifty CPSC sector, which is really good, doing well. And if you wanted to see what are the stocks within this Nifty CPSC, maybe if I had a filter or a column which says Nifty CPSC, then quickly they can filter that and see which are the stocks that are really good, doing well. And then maybe you can take a look at the charts and then take further decisions. So this snapshot tool is a really important one, which will quickly help you come down to the important question of what stocks to trade or pick, instead of looking at so many charts and getting confused, where do we want to trade. Now let's also look at the RRG. In the RRG plot, one thing that really caught my attention or eye is the CNX energy. Two reasons: because it is in the leading and it has just moved from improving to leading. So the sectors which are moving from improving to leading have a high uh, potential, as because they already have the momentum and now are showing relative strength vis-a-vis the Nifty benchmark. And also look at the tail length. The tail length is pretty massive, meaning it has so much of power. It has moved by so much over the last couple of weeks, and hence was able to make a stronger move. And its direction is also towards the northeast, like I mentioned in my previous RRG video. Whichever stocks or sectors which are facing towards this direction, let's say you think of this as a compass and it is the northeast direction, and whichever sectors are pointing towards that direction, they have both momentum as well as relative strength. So let's also see the chart of NSE CNX energy. So this is the chart of energy on the weekly time frame. You see that it has been undergoing a lot of consolidation on a upward sloping trend, and it has just broken out and in a proper order. If you see in the daily chart also, it is in a proper order of the price above the 21-day EMA, 21-day above 50, 50 above 100, and 100 above 200. And this is making a higher high and higher low kind of structure. We have a couple of stocks from this sector, like oil. It is also undergoing same kind of fashion. And then we have Coal India. So you can take a look at this sector and see what all stocks which are there. As I mentioned, if let's say, if suppose I have that linking between the stocks and the sectors, then it becomes really easy for someone to quickly double down on what sectors or what stocks to trade upon. So this is purely for the discretionary traders, not for the non-discretionary traders like us, who, let's say, who are trying to build a rules-based strategy. Then this is of no use. It is just for their own understanding. But we'll not be taking any trade judgment calls based on the charts or based on the RRG plots. This is just for our reference, where is the sector rotation happening, which stocks are picking up, which sectors are moving up, because anyhow our rules will guide us where to invest next and which stocks to exit. So that is about the sectoral rotation and the dashboard that I prepared. Let's also quickly see what are the stocks and what are the market caps doing. So usually I track the five market caps. The first market cap that I wanted to show was the Nifty 50. Nifty 50 is in a clear uptrend. Whereas there was a small blip during the budget session, and it touched the 21-day EMA, and it is again back to normal, and it's all-time high. Next, we'll see the Nifty Junior. Nifty Junior also same pattern, just like Nifty 50. In fact, it's even better than Nifty Junior 50 because it is always making a higher high and higher low kind of structure, and is now again it's at its all-time high. Let's also see the other uh, indices. Mid cap made a doji at its all-time high. We'll see what it means, whether it is overextended or not. We will be seeing as this week unfolds, but it is also same following the higher high and higher low kind of a structure. Micro cap 150 has overextended a bit from its 21-day EMA. Small cap 150 also looks a little bit overextended, but I think all of them are clearly at its all-time high. The market is moving in a clear uptrend. That's what we can infer by looking at the charts.